The cryptocurrency market is no stranger to bold predictions and price forecasts. In the realm of cryptocurrencies, Bitcoin reigns supreme as the pioneer and the most prominent digital asset. Recently, Bernstein, a global asset management firm, made headlines by asserting that Bitcoin's price could soar to $150,000 by 2025. This audacious projection is grounded in the anticipation of the U.S. Securities and Exchange Commission, SEC, approving a Bitcoin exchange-traded fund, ETF, in the first quarter of 2024. In this comprehensive analysis, we will explore the factors contributing to this remarkable prediction. We will also delve into the potential impact of a Bitcoin ETF, assess the significance of the upcoming Bitcoin halving event in 2024, and consider the broader context of regulatory challenges in the cryptocurrency industry. Additionally, we will provide market commentary and expert insights to help you navigate the ever-evolving landscape of Bitcoin and cryptocurrencies. The Bitcoin price projection. Bernstein's projection of Bitcoin reaching $150,000 by 2025 is nothing short of ambitious. To put this figure into perspective, Bitcoin's current price stands at approximately $34,000, with its previous all-time high at just over $67,000, achieved in November 2021. The suggested price target represents not only a substantial increase from the current price but also nearly 5 times the cryptocurrency's previous all-time high. The foundation of this prediction is rooted in the expectation that the SEC will grant approval for a Bitcoin ETF. While the cryptocurrency market is no stranger to bullish forecasts, the potential approval of a Bitcoin ETF is seen as a game-changer, with the ability to significantly influence the market's trajectory. The potential impact of a Bitcoin ETF. The approval of a Bitcoin ETF has the potential to be a watershed moment for the cryptocurrency market. It would provide traditional investors with a direct avenue to gain exposure to Bitcoin within their investment portfolios, effectively opening the floodgates to a new wave of capital and expanding the appeal of Bitcoin. At present, the most analogous product to a Bitcoin ETF is Grayscale's Bitcoin Trust, GBTC, which currently represents only around 3% of the total outstanding Bitcoin. Contrastingly, a Bitcoin ETF, once approved, could facilitate the redirection of a significant portion of Bitcoin's circulating supply into these funds, potentially reshaping the cryptocurrency market. Bitcoin as a commodity. Gautam Chugani, the analyst at Bernstein, frames Bitcoin as a commodity and underscores the importance of assessing its potential dispassionately. Regardless of personal sentiments about Bitcoin, evaluating it objectively as a commodity reveals an intriguing opportunity. Chugani notes that the timing of the SEC's potential approval of Bitcoin ETFs by major asset management firms such as BlackRock and Fidelity is imminent. This development, if realized, is expected to significantly impact Bitcoin's market dynamics. The Bitcoin halving event. Another factor brought into the spotlight by Bernstein's analysis is the upcoming halving event for Bitcoin, slated for April 2024. During this event, Bitcoin rewards for miners are reduced by half, as per the cryptocurrency's underlying code. The primary consequence of the halving is a decrease in the rate at which new Bitcoins are created, influencing the supply side of the equation. Chugani predicts that this event will result in the departure of losing miners, those who are unable to operate profitably with reduced rewards. This exodus is expected to contribute to a reduction in the supply of newly minted Bitcoins and, theoretically, have a positive impact on the cryptocurrency's price. Bitcoin's recent performance. It's worth noting that Bitcoin's price has exhibited an upward trajectory in recent weeks, reaching $35,000, its highest level since May 2022. Investors in the cryptocurrency market are cautiously optimistic about the possibility of a Bitcoin ETF approval by the end of the year. This optimism is partially fueled by the SEC's decision not to appeal a key court ruling in Grayscale's lawsuit against the regulatory body. However, it's important to recognize that while this court ruling favored Grayscale, it does not guarantee the SEC's approval of a Bitcoin ETF. The SEC, under the leadership of Chair Gary Gensler, has approached cryptocurrencies with a degree of skepticism. Gensler has referred to the crypto space as a breeding ground for fraudsters and scam artists, which raises questions about whether the regulator will continue to resist crypto ETFs. Regulatory challenges in the crypto industry. The cryptocurrency industry has faced its share of challenges, particularly in the realm of regulation. One prominent example is the SEC's lawsuit against Binance for securities violations earlier this year. Additionally, the previous year saw the cryptocurrency exchange FTX file for bankruptcy, and its former CEO, Sam Bankman-Fried, is currently embroiled in legal proceedings related to fraud. Market commentary and expert insights. To gain a more comprehensive understanding of the potential trajectory of Bitcoin and the viability of a $150,000 price by 2025, it's essential to consider the insights and observations from experts in the field. The impact of regulatory approval. The potential approval of a Bitcoin ETF is a significant factor contributing to the bullish outlook. It opens the door for institutional investors and a broader retail audience to participate in the cryptocurrency market. The influx of capital could lead to increased demand for Bitcoin and, consequently, drive its price higher. The halving event. The Bitcoin halving event has historically had a notable impact on the cryptocurrency's price. As the supply of newly minted Bitcoins decreases, scarcity can drive up demand and value. The upcoming halving in April 2024 is viewed as a potential catalyst for price appreciation. Market sentiment. Bitcoin's recent price surge and the optimism surrounding a potential ETF approval have undoubtedly contributed to positive sentiment in the market. However, the market's sentiment can be fragile and influenced by a myriad of factors, including regulatory developments and macroeconomic conditions. Regulatory uncertainty. The regulatory landscape for cryptocurrencies remains uncertain. While the SEC's decision not to appeal a court ruling was a positive development, the regulator's stance on cryptocurrency ETFs remains unknown. The crypto industry is still navigating a complex regulatory environment. The broader cryptocurrency ecosystem. Bitcoin's price is often influenced by the performance of other cryptocurrencies and the overall health of the cryptocurrency market. Traders and investors closely monitor trends and developments in the broader ecosystem, which can have a spillover effect on Bitcoin's price. Conclusion. The prediction of Bitcoin reaching $150,000 by 2025 is a captivating scenario that has sparked the curiosity and imagination of those in the cryptocurrency space. While it's an ambitious projection, it's built on a foundation of potential factors, including the approval of a Bitcoin ETF and the upcoming halving event. The cryptocurrency market is inherently dynamic, and its trajectory is shaped by a multitude of factors, ranging from regulatory decisions to market events and sentiment. The $150,000 price projection is a compelling scenario, but it remains contingent on various variables. As a result, staying informed about these developments and understanding the broader context is essential for anyone seeking to navigate the ever-evolving landscape of Bitcoin and cryptocurrencies. As the cryptocurrency market continues to evolve, it's a space that demands vigilance, adaptability, and a deep understanding of the factors influencing its future. Whether you're a seasoned crypto enthusiast or a curious observer, the journey of Bitcoin remains a captivating narrative in the world of finance and technology.